Happy VA Wednesday. So today we're going to be talking about a fun little fact about VA loans that not a lot of people realize. Did you know that you can negotiate with the seller to pay down some of your debt? Yeah, seriously. Credit cards, student loans, cars. Yeah, with VA, when you're negotiating, let's say they want $500,000 for the house, okay? And you're like, well, Jen, I don't have closing costs either, so walk me through this. You could ask for 4% towards closing costs and 4% towards your debt. Now look, you need a seller who's willing to play, but for instance, on $500,000, that's $20K for closing costs, which is a lot, but if you're in New York or Maryland, you need every nickel, and $20K to go towards your debt. Seriously. So we're going to talk about where this is magical and where it's deadly, because the concept of it is awesome. And we've been doing a lot of it recently. And every time we do it, I did a short on it. I was doing like a hee. I love it. It's so nice. It's so nice. Like, it just brings so much joy. Every time I call someone and I'm like, hey, you got a credit card we can pay off? We got some extra money. Everyone's so happy, which makes me happy. But okay, so let's talk about where this is good. Now, sometimes you'll negotiate for a closing cost credit and there's not enough closing costs to cover it. So let's say that you ask for 20K, they say we'll give you 20K, but you only have 15 in closing costs. You can't just get cash at the table, okay? You can never get cash back beyond your earnest money deposit. Let me say that again. You can never get cash back beyond your earnest money deposit. The earnest money deposit is what you put as a sign of good faith, okay? Because a lot of times people are like, oh, I'm gonna negotiate these fat credits, then they're gonna give me money at the table, I'm gonna get carpet, I'm gonna get, nope, no, okay? Up to 4% towards closing, up to 4% towards debt. Okay, so back to that example, you got a 20K credit, you only have 15 in closing. Oh my God, what are we gonna do with the other 5K? Now, if this was a conventional loan, okay, and obviously you can't do 4% on, okay, very in the weeds there, but if it was a conventional loan, we'd have to have the seller reduce the credit, right? We could buy down the rate, we could have the seller reduce the credit, but if we can't spend the money, there's nothing you can really do with it beyond like a home warranty, okay, or buy down the rate. With VA, we can go, okay, cool, where are your credit cards? Let's pay them off. And we just need the most recent statement that goes into escrow and that money goes towards that, okay? And if you're like, well, I don't have credit cards, but I have student loans, cool. You can go towards that. Well, I don't have either of those, but I've got this car payment. Awesome, let's get that baby down. So it's really a great feature. And if we move into a market where buyers have even more power, I think there's a lot of fun that could happen with it. Now, here's my warning, because with everything good in this industry, there's always someone trying to twist it in a way that's not necessarily as positive, okay? Now, there's different opinions on this, but I'm gonna tell you my opinion. If I'm qualifying you to buy a house, should I be if the only way you can qualify is if the seller pays off your credit cards, I don't think that's smart, okay? Here's why. Most of the time when credit cards get paid off, they get charged back up. It's unfortunate. It's a vicious cycle, right? But it's like this, look, if you don't have money in your bank account and something breaks, you're gonna have to use your credit card, right? And then it just keeps on growing and growing and growing. So I do think that we'll see some builders, you know, who are like, oh, you don't qualify, no problem. We'll pay down your debt and we'll pay your closing costs to get you in that house. That makes me a little bit more uncomfortable, okay? Now, if it was something like a student loan and you're not in school anymore, I think there's less risk. But my biggest fear, you know, and look, we'll always do what you guys want, but it's my job on this channel to tell you like how some of this stuff goes dark. If it's credit cards, and let's say you've paid off those credit cards a couple times and it just keeps on coming back and back, the seller paying that off isn't going to be a magic bullet. You have to look at your spending and you need to make a commitment not to charge those cards up again. Because if the only way you qualified for that house was with the seller paying down the debt and you charge up those credit cards again, you're going to be in a foreclosure. Right? You're going to lose the house because you're not going to be able to afford it. Now, if you can qualify and afford the house as is without the seller contributing, but then the seller contributes, cool, awesome. amazing. Just be really cautious if people start pitching it the other way around, because I don't think the market's going to drop. I really don't think it is. I could be wrong, but let's say it did. If it did, you're going to see people who understand this credit card hack. They're going to use it as a way to get you guys into houses, which, unless you change your spending habits, could harm you in the long run. So really be cognizant of that. If they're paying off a car, if you're like, well, I really want this house, but my car payment's too high, but the seller will pay it off. Okay, if you're not going to go out and buy another car, great. But just remember that if you don't qualify for a VA loan because of some sort of debt, if that debt comes back, you're not going to be able to afford the house. Okay, without like a raise or something else. So not to get all gray on such an amazing feature of this loan, but it is something that, I am concerned that it could be used that way without people fully understanding that, like, hey, the only way you qualified was without this debt. So if you do end up with this debt again, you're toast. Okay, I don't think anyone's going to explain it like that. Definitely not like that, but once again, if you've got some extra money left over, if there's a way to negotiate them to pay down debt, if you qualify regardless, fantastic. Just don't put yourself in a position where if you do go back to the way things were, you can't make your payment. Okay, so I hope this video has been helpful. I hope you saw the magic of this attribute instead of just the darkness, which I may have focused on too long. But you guys know me, I am a worrywart, and the last thing I ever want to do is get a call from a veteran where they say they're losing their house because someone didn't explain something. So that is my word on it, and what I think of it. If you guys have questions, comments, if anyone's told you, hey, we'll get the seller to pay off all your debt so you can buy this house, but they didn't explain to you that if that debt comes back, it's going to be really hard making those payments, let me know. Put them on blast. The only way we're going to change this industry is if we shine a light on everything that's gray. So as always, thank you for watching, guys. I'm licensed in 48 states to do mortgages. I love VA mortgages. I mean, come on, I love them. So I'm here to help you guys as much as I can, okay? Thanks for watching.